SUI just slipped under the psychological $1 handle. Guys, it is February 6th, 2026, and SUI has just made a multi-month low that has caught most people off guard. Today we're going to analyze the damage, the technical fallout, the 95-cent support test, and the impact of the February 1st $65 million unlock saturation. Also, we'll be looking at the HashKey exchange listing that just went live in Hong Kong. The following technical analysis and price targets are not financial advice. They are for education and entertainment purposes only. Please trade according to your own risk profile. So right now, guys, we just right now reclaimed $1. That is an important psychological win for SUI. But if we take a look at the technical analysis here, what do we have to do in order to regain that bullish momentum? So I've got some Fibonacci retracements drawn going all the way back to August of 2024 when we hit a low at around 45 cents. I drew, that's the bottom, then I went left to right, went all the way up to $5.36 on January 5th of 2025. So we can see this long-term chart over the last year and a half, we're honoring pretty well. We can see that on this right here, this red line, we tagged that twice, boom, boom, right? This was on May 12th of 2025. We got about there again in July of 2025, and then it was just kind of down from there. So you can see these clusters. We hit the peak, top right on the 236 retracement, top right on the 236 retracement, sliced right through the 50% retracement. Then right here at the 786, a cluster of support. Not right on it, but close enough to make it meaningful. And now breaking the psychological $1 support is not good. Luckily and thankfully, we're back at that $1. But if you look at this, it looks like it really wants to get back down to 46, 48 cents. So I'm going to zoom in on this most recent swing, this swing from $1.30 up to $2 and then down, just to see where we think SUI might trade in the coming days, weeks, or months. All right, so let's see here. This looks good right here. I'm going to clear off this long-term Fibonacci retracement, and we're going to draw something a little more recent. So we're going to go back to April. I don't know. Let's go here. We're going to do this most recent swing. I didn't zoom out far enough. All right, so let's take a look right here. We're going to go from the lows of $1.30, which we first hit that on November 22nd of last year. We hit it again, we hit it again. So this from November until early January served as an important low. So let's go low, we'll go up to the high, which was on January 5th. We can see we hit that, we had the Greenland fallout, we had the rate scare, we had Kevin Warsh being nominated by Trump, and you know, who knows, the silver and gold unwind, all sorts of things happen to make crypto become risk off and just fall through the bottom of everything. But we can still see right here, this $1.30, boom, slice right through that. Kind of sliced through $1.16, which is the 1272 retracement, rebounded, held there for a couple days, and then straight down again to the 87 cents, which is a 1618 Fibonacci retracement to the downside. And that held. We poked through it, we got a little wick, came back up to that $1 psychological level. So right now we're in here in no man's land. What we need to see, this could be some chop in between 116 and 87 cents. We could be having some chop. If we get above 116, okay, we might be able to rebound up a little bit. However, if we fall below 87 cents, the next line is, and I don't know if we'll get that low, but 15 cents. Okay, that's way down there. So let's hope we can hold this $1 and reclaim $1.15. Otherwise, we'll have to come back, regroup, and look at where the next technical level of support would be. So now we're going to jump over to the news, guys, talk about a couple catalysts that maybe could also give us some support for the price of SUI. First story, guys, the February 1st token unlock. So on February 1st, 1.15% of the supply, which is $65 million, was released. Unlike previous months, this liquidity hit a stagnant market, causing the current dump under $1, right? That is one reason why SUI fell so hard, is crypto was already selling off and they unlocked some tokens. Too much supply, not enough buyers, fell below that dollar. So the market is currently struggling to absorb this exit. However, trading volume remains high, suggesting that while supply is hitting the market, there's significant smart money interest accumulating at these sub $1 levels. Number 2, HashKey Hong Kong listing on February 4th. The licensed HashKey exchange officially launched SUI USD trading this week, opening a direct regulated pipe for Asian institutional capital. So this provides a critical liquidity offset to the US-based ETF delays, and while it hasn't stopped the price slide yet, it establishes SUI as one of the few assets with a regulated east-west liquidity bridge, which is essential if we're going to see a recovery in 2026. And story number 3, guys, the Sui Stack, the S2 privacy layer update. So Meiston Labs confirmed the first mainnet implementation of protocol level private transactions is going to be scheduled for Q2 of 2026. This moves SUI from a pure speed play to a utility play. Institutional users require privacy for payroll and supply chain management. If SUI can offer this natively while keeping gas near zero, the current sub $1 price may be viewed as a massive valuation disconnect. So guys, these 3 stories, while we're not going to dive into the details on any one of them, these are 3 of the main stories that were come out in the last couple weeks that could have an impact on the price, and just so we can keep up on things that are happening with this network. So guys, with that being said, with the current prices where we're at and everything that's going on, we've got updated 12-month price projections. So very quickly, our bear case is 55 to 85 cents. The catalyst for this, continued unlock pressure and a failure to reclaim the $1 to $1.02 level by the end of the month. Our base case though, $1.85 to $3.20. So this means we get back up and retest the 200-day simple moving average. The SuiStack adoption metrics go live in mid-2026 and things start to look positive. Also, crypto as a whole needs to rebound. Bitcoin needs to rebound. I don't think we're going to see SUI above $1.50 if Bitcoin's at 50,000. So all of crypto needs to rebound. And our bull case, guys, crypto rebounds. Clarity Act provides us some clarity. And the spot SUI ETF approval and a rotation from Solana into move-based ecosystems. This would give us a $5.40 to $8. That is a very low probability, but anything could happen. We've seen Solana have some issues. We've seen Solana's node operators complain that things are too expensive. We've seen the meme coin activity on Solana dry up. So to say that SUI can't compete with Solana, that's false. SUI can compete with Solana. And if some things happen to Solana and SUI makes good strides, it could take share and it could see that $5.40 to $8 range. So in conclusion here, guys, SUI is currently sitting in a high risk, high reward accumulation zone at these $1 levels. And for those who believe the 82-cent floor holds, right? We can go back and look at the chart, but 82 cents ish, right? That might hold. And the technicals are ugly. They're ugly. We looked at the chart. We got to reclaim some key levels. But the institutional infrastructure is still being built faster than ever. And this is a long-term play. We have to remember these are not meme coins. These are infrastructure, long-term infrastructure plays, and they're going to require patience. So we have to ask ourselves though, is 90 cents-ish the ultimate bottom? Or are we heading for a retest down at 60 cents and below? Drop your price target down in the comments. Let me know if this is a value play or a liquidity trap. This is Luke with Ledger Prime. We'll see you in the next one.